The trend is your friend until it ends or bends. That's exactly right, friends. The trend is your friend until it ends. So every single trend comes to an end and a new trend starts. So wouldn't it be great if you can enter a trade when the trend is starting? That means when one trend ends and you can enter into the trade when the next trend is starting. Or let's say a bearish trend is ending and you understand how to enter the trade and you can enter into a bullish trade from the bottom. Don't you think it would be a great idea? So, what if I said there is a technique which can help you in understanding the charts in a better way and enter on trend reversals? Yes, you heard it right. You can enter the trade on trend reversals. Hi, I'm Dr. Joe, and I hope you all are doing great. Welcome to this new video. In this video, we are going to understand how to enter into a trade when the trend is reversing. Now, every single step that I'm going to explain in this entire process is very, very important. So, if you want to understand the entire process, stay till the end of the video and listen to every single step I'm explaining, because that way you will understand how to trade reversals. So, let us see step by step how to trade reversals. Step number one is to understand what is a market structure, because that is the key to entering into a reversal trade. So in this video, while explaining the entire process, I will be explaining how to identify reversals, how to confirm that this trade is a good trade. We will also see where to enter the trade, and we will also see where to exit the trade. Yes. So all these four things we will see. So let us start with understanding what is a market structure. Now, when the market is in a downtrend, the market structure will look something like this. You will see a high, then you will see a low, then you will see a lower high, you will see a lower low, you will see a next lower high, and then you will see a next lower low. And this will continue to a next lower high and a next lower low till the market is trending in the downward direction. So this is basically a market structure for a downtrend. Now, how do we know that this market structure is breaking? Because that is the key to entering into a reversal trade. Now, how do we know that this market structure is breaking? That means the trend is going to stop. How can we understand that? Because if we don't understand that, we will never be able to trade reversals. So let us see how the market structure breaks. So what happens when the market structure is breaking is the price will create a new high. Like you can see over here, the price is creating a new high. It breaks the lower previous high. So it breaks one lower high over here. It breaks the second lower high over here, and it has created a new high. Only when the price breaks the previous lower highs and creates a new high and then comes back into the zone. That is, the price comes back, but it does not go below the lowest point. Okay, it does not go below the lowest point. It stops somewhere in between the previous high and the lowest point. And then the market turns back again. So at this particular point, if there is a good support zone, this is where you're going to enter into a trade. Why? Because now the market has created a new low, which is the lowest point, then higher low one, and you're entering at higher low two. This is how you see that the market structure for a downtrend is breaking. Now I will explain all these things in more detail when we are going to enter into a trade. Let us see how an uptrend market structure looks like. In an uptrend market structure, there is a low, then there is a high, then there is a higher low, then there is a higher high, there's a higher low 1, then there is a higher high 1, and then there's a higher low 2, then there's a higher high 2, and then there is a higher low 3. Now this will continue if the uptrend is very strong. But if the market decides to change its direction, this is what will happen. After the highest point over here, the price will make a new lower high. The price will also break the previous higher low, point number 3, okay, and the price will come down. So this way we are sure that the market structure of the uptrend is broken. Then the price will retrace back again into the zone, but the price will not break the highest point in the particular trend. It will reverse back before that. And if you find a good resistance zone over here, this is where you will want to enter for a sell. So this is how the market structure looks for a uptrend and how a breakout of a market structure looks like. Now, when the market structure looks something like this, confusing, we can consider that the market is in a sideways market. So there is a low, there is a high, there is a higher low, there is a higher high. Then the price comes down, it creates a new higher low. But then this time the price does not create a new high. Then it comes back, creates a lower low, and the price creates a lower high. Then it's creating a new lower low. But then again the price creates a new high. That means there is a lot of confusion in the market. And when there is a confusion in the market structure is clearly saying that do not enter the trade because there is no clear uptrend or there is no clear downtrend. So I hope that the market structure is clear now. In an uptrend, there has to be higher highs and higher lows. And in a downtrend, there has to be lower highs and lower lows. It's very, very important. If you are not able to identify this, then avoid trading in the market. Now let us see how to enter into a bearish trade when it is getting converted into a bullish trade. Okay, so we will look at every single step very, very carefully to understand how can we enter into a bullish trade after a good bearish trend. So as usual, first step is to identify a downtrend. You can clearly see over here, there's a low, there's a high, then there's a lower low one, then there's a lower high one, then there's a lower low 2, there's a lower high 2. Normally, any particular trader would enter into a trade over here. Why? Because you can draw a good trend line. So the price came once at the higher point, the price came twice at the lower high one. So when it comes for the third time, you can go for a sell, which is already written over here, and you can stay in the sell till the market structure is not broken. Now, when you are sitting in a sell trade, you have to be very, very careful because you have to consistently look backwards and see if the price is reaching any strong support zone. Like you can see this yellow line over here. This is a strong support zone. So if the price reaches the strong support zone, you have to be very, very careful because support zones are where the price reversals happen. Now, how do we know it's a support zone? You have to look backwards. When you look backwards, you will see the price has come to this particular zone and bounced from here. So if the price has done this previously, there are chances that the price can do the same again because technical analysis is all about repetition of patterns. So previously, if it has happened, the probability is extremely high that it can happen again. But sometimes the price can continue in the downward direction to a next support or supply zone. Okay, so it is not necessary that every single support zone and supply zone can be a reversal point. So you have to be very, very careful. That is the reason you have to wait and watch the market structure. Like you can see over here, the market structure did not break. From this particular support zone, the price continued down and went to the next support zone. So when you are trading, it is very, very important that first you have to look for support zones if you are going for a buy. You have to wait and watch for the price to reach some good support zone. And then you have to look for a break of market structure. So now let us consider that the price decided to reverse at the first support zone. So what are the things that you have to observe? So number 1 point, the price has come to the support zone and reversed from there. Number 2 point, it has broken the last lower high. In this case, LH4, the last lower high, the price went above it. Okay, so in this case, you can see the price has broken the last lower high, which is LH4, and has gone above it and created a new higher high one. Then the price came back down, but the price did not go into the support zone, nor did it break the support zone and go down. It started reversing again over here. So once it starts reversing over here, you can clearly see that here there is a support. Here there is a support. So this is where you can enter into a trade, or you can wait for the next retracement point and then enter over there. So most important thing is you have to wait for the market structure to break. LH4 point in this particular case is the most important key area. When the price broke that point and created a new higher high, that is the point when the market structure for this particular downtrend is broken and an indication that the price can go up from here. Now just imagine if the price would have come down from here and created a new lower low LL6, then the market structure is not broken. In this particular case, since the price reversed from HL, that is higher low 1, that is why we know that here the market structure is broken. Like you can see over here, an LH1 becomes the entry point. Now let us look at a real chart, how it will look like. So like you can see, this is a Euro USD chart, and we have taken the chart from June to September. Okay, you can see that there is a very good downtrend where you can see the price is creating lower low and lower highs, lower low and lower highs, lower low, lower high, lower low, lower high. Okay, and this zone over here between the two blue lines is a good support zone. Now, why it is a good support zone? Because we will look behind and we can see that in this particular zone, the price has reversed twice. In fact, more than twice, 1, 2, 3, 4, 5 times. So this becomes a very, very important support zone. Now let us wait for the price to come to this zone and then look at the reaction of the price. Like you can see, almost towards 25th, 26th of September, the price has come into this particular support zone over here. Now we have to wait for the price to retrace. If the price continues in the downward direction, then we cannot look for a market structure breakout of a downtrend. Only if the price retraces from here, then there is a market structure breakout for a downtrend. There you go. We can see that the price is trying to go up, but it has still not broken the lowest high. Okay, like you can see over here, we have drawn a black line over here at the lower high position. The price is still between the support zone and the lowest high zone. Somewhere close to October 16th, you can see the price again went back up. It touched the lowest high position. It created a double top, but it still stayed within that price range. So again, the market structure is not breached yet. After a few days, almost around 23rd, 24th of October, the price has gone above the lowest high. Two lowest highs, and the price has gone beyond it. You can see very clearly that from the support zone, the price went up, came down, it created a higher low, but it did not create a higher high. Again, it went back up, and this time it created a new higher high. Now let us see if the price is coming back again into this zone. There you go. Now the price broke the market structure. It created a new higher high. It came back down. It got a good support at the previous higher low, and you can see in this particular box that the price has come and tested. This area you will not go for a buy because the higher high is not created. But in this area you will go for a buy because a new higher high is created. That means the downtrend market structure is breached. Now you can enter the trade over here, or if you want, you can wait for another support area. But since the market structure is breached, this is a good reversal trade to enter. You can enter over here with your stop loss just below this support zone. You don't have to put your stop loss below the big support zone. You just have to put your stop loss below this new support zone. And there you go. After that, the price has continuously gone up. As I told you, that if you are fearful of entering a trade at the first support zone, you can enter at the second support zone also. But if you take the trade over here, your risk to reward is at least in this case 1:8 times. Now that is the beauty of entering into reversals. Now we come to the most important aspect. What is that? How do we exit a trade? So I hope you remember we discussed this uptrend and break of market structure. So while the market is going up, do not exit the trade till the market structure is intact. And when the market structure is broken, you exit the trade. This way, you will get a very, very good exit. So market structure breaks, the price retraces. And when the price retraces, in this example, like you can see, LH1 is the price where you're going to exit the trade. And this is exactly where you can enter for a sell trade also. So friends, I hope that this video has made it very, very clear how to identify a reversal. That is, you have to wait for the market structure to break. And second is where to enter a trade. Also, what is important is where to look for reversals. You cannot look for reversal anywhere in the chart. You have to look for areas where previously the price has reversed. That is very, very important. So every single step that I explain in this video is very, very important. Then only you will be able to enter into a right reversal trade. Now this was an example of a bullish reversal. For the bearish reversal, it's exactly the opposite for it. I hope that this concept is clear. Friends, if you love the way I'm creating these videos, please like and share my videos. And if you're still not subscribed to my channel, kindly subscribe to my channel. And there are so many others who want to learn these trading and investing techniques. So if you share these videos, it will be very, very helpful. I always say, keep learning, keep growing, keep getting better every single day. And if you really want to make it big in the stock markets, you really need to have a lot of patience, practice, and persistence. All these three things are very important to become a successful investor or a trader. Friends, I have a community where we discuss all these strategies and where we teach and discuss all these concepts. If you're interested to join the community, the link is there in the description. Friends, that's all in this video. Thank you. Namaskar.